Hello everyone, welcome to the channel of Trigonometry. So the non-farm payroll just came out. It was nasty. And what's going on with Trump's trade deal? And the market is in deep red today. So what is going on? Let's all break it down today. So today is August 1st, the first day of October. We have the non-farm payroll today. For the non-farm payroll of July, it came out at 73,000, missing the estimate of 110,000. But this is not the worst part. The worst part is the June figure was sharply revised down from initial 174,000 to just 14,000, while May's reading was also cut by 125,000. So we have a combined of over 250,000 jobs being cut in May and June. That's really, really bad news. And granted, there's some seasonal adjustment and all that. Like we always have adjustment on non-farm payroll number. It's some people never trusting these numbers. And me personally, I always believe that this number is not accurate. We've seen the ADP employment number being much more accurate. The ADP employment last month was actually a negative number, and everybody just kind of brushed it off like it was nothing because it was not a number that Fed look at. The Fed only look at the non-farm payroll number, which turns out to be a complete joke. It's a complete joke. You revised 250,000 jobs in 2 months. You lost 250,000 jobs. What a shit show. As everyday people, you kind of know the job market is not good. It's just that the number never show up on non-farm payroll. But everybody know the job market is bad. You have friends and families being laid off. Like this is like so common right now. And market doesn't care. Market didn't care until it's being told that all the previous job numbers were fake. It was a scam. How ridiculous. And we have some the other numbers, the ISM manufacturing PMI missing expectation as well at 48, which is very, very bad. And the manufacturing employment at 43, which is also horrible number. Michigan consumer sentiment uh, at 61.7, missing estimate of 62, even though it's slightly better than previous months, but still it's very bad number. The manufacturing new orders at 47, in line with the forecast, and manufacturing price is at 64.8, missing the consensus. The 5-year inflation expectation at 3.4, lower than the expected 3.6. Consumer expectation at 57.7, lower than the expected 58.6. Current condition at 68, better than the expected of 66.8. Inflation expectation at 4.5, higher than the expected 4.4. So these numbers are not good. And the really bad one is non-farm payroll revision that really scared the shit out of the market today. And we have a lot of news coming from Trump. Basically, he listed all the new tariff rate for the all the remaining countries that did not make a deal with the United States. Those numbers are all across the board much higher than previously assigned, from 15 to 20%. So the estimated average tariff rate right now is at I believe 18%, but that may not be the final number. to make the matter even worse, Trump today he just posted on Truth Social. He said, based on the highly provocative statement of the former president of Russia, Dmitry Medvedev, who is now the deputy chairman of Security Council of Russia Federation, I have ordered two nuclear submarines to be positioned in the appropriate region, just in case these foolish and inflammatory statements are more than just that. Words are very important and can often lead to unintended consequences. I hope this will not be one of those instances. Thank you for your attention to this matter. So this is bad. And as if we don't have enough bad news, Trump just poured on it with this new war escalation against Russia. Now, now it's no longer Russia against Ukraine. Now it's United States. We are on the verge of a nuclear war. Like, are you kidding me? This is crazy. This is absolutely crazy. The QQQ today down almost 2%. It gapped down around 1% and then closed down another 1%. So it broke down below the 20-day EMA. Now it's in no man's land. This current support at 552, I don't think it's going to hold at this level because all this selling pressure, you see all the past 2 days, these two giant selling volumes. I don't think this is gonna hold. And even at maybe 545, this is a very weak support. The next strong support may go all the way to 536 to 532-ish. Yeah, that's a long way to go. If you're talking about this gap fill at 532, that's another $22, which is another like 4%. That's a long way to go. Will we get that in one day or a week? I don't know. But I don't think this current support at 552 is going to be able to hold because we just went up so far and without any consolidation and adjustment, resulting this being a very, very weak support because it did not have enough consolidation. As I was saying, this bull run is not healthy because it did not have any sort of a pullback. It was overextended, and once the dump started to kick in, very, very ugly. One day can basically wipe out a whole month of gain. So basically, if you look at here, we basically in one day we did almost wipe out the entire gain of July. So we closed the July around 545. Now we are right back at 553, only like 1% away. So this is very, very dangerous. You have this sharp drop based on a big news, and I think more selling pressure is going to pile in next week when we have more news regarding the new tariffs, regarding the sanction on Russia, or possibly war escalation, and we have a lot of macroeconomic issues regarding employment. If those employment indeed lost 250,000 jobs in the previous 2 months, we should never be here in the first place. Like, can you imagine if we have Bureau of Labor Statistics told you last month we lost 100,000 jobs? You think the market's gonna skyrocket like this? We probably have a lot of pain ahead. Where is the bottom? I don't know. We'll see. When we do bottom, or the chart will actually give us a signal of a bottom. It could be extremely fear on the CNN fear and greed index. If we reach extreme fear, or sometimes it could be the VIX spiking towards 30 plus, or it could be something else that really triggers the margin call. If you look at the intraday chart on QQQ, it opened at around 559-ish, and then go went all the way to 552, which is a current support and a bounce, like about 30 minutes in some consolidation, trying to break out, but it couldn't break out. Reverse back down all the way to retest the support again at 552, and then bounce for another 30 minutes and then go sideways to close. Um, we don't see any bullish catalyst. All the trade deal, all the tariff talk, that's behind us. The catalyst of big beautiful bill is behind us. What's what's the next good news that can prop us to the next level? I don't know yet. Maybe we don't have that yet. Until we price in all the bad news and consolidate at the bottom. Um, and then we'll probably try to look for a bounce. But at this moment, I'm not even attempting to buy the dip at any point. TLT is up over 1.4% due to the recession fear. Now, basically, the Fed will have to lower the interest rate. The probability of a rate cut was below 40% yesterday. Now it's up to over 80% after the non-farm payroll job number came out. Um, so we're basically fully pricing a rate cut by September. I wouldn't be surprised to see if we price in two rate cuts in the September meeting. Um, that's entirely possible, depending on if we get an even worse job data in October. So we'll see how that works. And the VIX is up 21%. At one point, it was up almost 30%. It closed at 20, above 20. I don't think we're out of the woods just yet. Um, we could possibly retest the $25 high, which is another 20%. We may have another 20% to go to test the 25 on VIX. And then you look at SPY, it's the very similar story. So it basically in one day you wipe out most of the gain in July. And you look at SMH, it was down. It actually broke down even further. SMH is even more volatile. It broke down below 280 at one point, pulled back a little bit before market close, but it's broken down all the key support. I don't think 280 is any kind of a strong support. The next major support may be the all the way around 265 to 260 range at the gap. This could be the next support, the major support. Microsoft, even after a blowout earning, getting dumped back to back red candles. Tesla, four back to back red candles. Maybe testing the low of 270. IWM is actually completely broken down already. It's the weakest of all. It's already testing the 200-day actually, 200-day EMA. This year it could be there could be some support right here around to 208 to this 212 range, but I don't know where it's going to stop because um, obviously small cap is most vulnerable to a recession. And Robinhood, it has a even though it has a green candle, it was down almost 9% intraday. That was not normal. Um, you don't see this kind of selling pressure on some of the strongest stocks in the market. Meta also down 3% today was relatively strong because it had a great earnings report, but still uh, it's not bullish at this point. AMD, one of those stocks still relatively holding well. It's still above the 20-day EMA, but when the market really goes down, nothing can survive. And we can look at Nvidia. Also, Nvidia sitting right at the 20-day EMA. I don't think this can hold. I think most likely will test much lower level before it finds a support. Google, Google lost 190 area. It gap below, retest the 20-day EMA and left a long tail to the upside. It's a bearish setup. Um, if we look at Apple, very big red candle. Apple actually beat on the earnings, but it was straight down from the open because you know what? When recession hits, Apple is not surviving the recession, and people will cut back on their iPhone purchase. And the worst of all today is Amazon. Amazon down 8% today. It's completely breaking down. Amazon actually delivered a triple beat on earnings, but it's down 8%. I don't think it deserves a 8% dump, but um, this is not recession proof either, unfortunately. And I think we have a very clear sign on Amazon that people were just dumping or just taking profit on anything they have. Um, this is very bearish for Amazon with this kind of a gap. Uh, I don't think it's going to recover anytime soon. It will usually take 1 to 2 weeks to find a bottom and then try to retest the gap above. So this is also very, very bearish. So overall, I'm still leaning towards structurally bearish for the entire market. There could be some speculative play here and there, like Rocket Mortgage today. It was up almost 12% today, doing very, very nice. It had a great earning today. Also, the pump on TLT today also added the additional catalyst for Rocket Mortgage because the long-term interest rate is going lower due to recession fear. But it sounds really ironic, right? When you have a recession, like how are people supposed to buy home using mortgage, right? The reason I am holding Rocket Mortgage is because I don't believe we will actually going into a recession, but there could be recession fear that actually can lower the interest rate. That would allow more people to refinance to mortgage their home. So that's why I'm bullish on Rocket Mortgage. Not because I really think we're going into a recession, but because I think people will fear of a recession happening. I think it sounds like a little contradictory, uh, but looks like it's playing out just like that. So I'm still holding my Rocket Mortgage RQT stock and see where it takes us. I'm also sitting on a lot of cash waiting to buy the dip, but I don't think the dip is complete just yet. So I'll be waiting patiently. So that's all for this video. If you like this video, please like and subscribe to my channel and leave a comment down below. Thank you, and I'll see you next time. Bye.